For the first time in its history, the Nifty50 index has produced a hat-trick, which is 3 consecutive years of double-digit earnings growth. Nifty EPS is expected to grow 20% in financial year 24, led by BFSI, oil and gas, metals and automobiles. These 4 sectors are likely to contribute 82% of the incremental earnings to Nifty50. The current corporate profit trend is similar to financial year 2003 to 2008. Price-to-book ratio tripled during this time period. Mid and small cap index valuations are lower than their 10-year averages. At the same time, the return on earnings, ROE, for the underlying indices have also improved significantly. As per the temperature gauge index, valuations are still in fair value zone. For incremental investments, we continue to suggest 50% deployment immediately and 50% to be staggered over 3 months, while being able to accelerate deployment during sharp corrections. Based on trailing 12 months earnings, temperature gauge index suggests that large cap valuations are still in fair zone. We maintain a bias towards multi-cap and select mid and small cap strategies across MF, PMS, and AIF platforms. Flatness in yield curve continues on account of monetary policy tightening, normalization of liquidity, and global factors. Short end of the yield curve has inched up relatively more than the longer end of the curve. Currently, the yield curve is flat with sweet spot between 3 to 5 year maturity. In the current policy, RBI has maintained a pause. On account of factors like global central banks' policy actions and global inflation trends, yields may remain volatile. In such scenario, we recommend to focus on accrual in 3 to 5 year segment, and the core allocation should be locked in at higher yields, GSEC or AAA, without taking extra interest rate and credit risk. We suggest that around 65 to 70% of the fixed income portfolio should be allocated equally to 3 to 5 year maturity high-quality GSEC or AAA equivalent accrual debt funds and equity savings funds. To enhance the yield, 30 to 35% of the overall fixed income portfolio can be allocated to REITs, InvITs, select high-yield NCDs, and private credit strategies. For liquidity management or temporary parking, investments can be allocated to arbitrage, ultra-short-term, liquid or overnight strategies.